Welcome back to Trade Talks. We're broadcasting live from inside ETFs at Hollywood, Florida. My name is Jill Malandrino. I'm your host, Global Markets Reporter at Nasdaq. And joining me for this segment is Bennyhoff, who's a Senior Investment Strategist over at Vanguard. And we're going to discuss the value of an advisor. Thanks very much for joining us at Booth 207. It's been quite an incredible conference.
Yes.
And this is one of my favorite topics, is explaining the value of an advisor. And Vanguard CEO Tim Buckley spoke earlier at Inside ETFs about the importance of understanding disruptions in the industry. What are some of those disruptors?
I think the ones that are the most common themes are the regulatory environment. Things like the DOL fiduciary rule is certainly bringing fiduciary obligations and the differentiation of suitability versus fiduciary standards to the industry, and that's probably a good thing. The second would be sort of the general awareness of fees and fee transparency. That is a bit of an offshoot of some of the regulatory changes we've already seen with 401ks. People about being much more transparent about what they're charging and how they're charging. And probably the last one is sort of the advent of technology and technology-enabled both services as well as competition. I think they're all having a general effect on sort of the preferences of investors. And the investors are certainly bringing that information back to the advisors, which is why it's so important for advisors to sort of be able to explain their value proposition in the face of all this.
Look, I'm sure they get the question a lot, why would I pay 1% to an advisor?
Absolutely, and it's certainly understandable because it's not long ago that they didn't pay anything for advice. They really paid for transactions. But in today's world, fee-oriented compensation is a better change for the comp structure and certainly the relationship with clients, because so much of it is there's less of a conflict of interest in many people's case. So, I think the one challenge is that many people have investment credentials, they have investment experience, and they lever those as the main part of their value proposition, as if building portfolios and using asset allocation and diversification, having the credentials and experience are going to be a differentiator when everyone, or certainly more advisors, have that than ever before. So I think they have a tendency to lean too heavily on their investment or portfolio management skills and less on the relationship management skills than they might, because clients really value that relationship.
Right. So what are some best practices when it comes to explaining your value proposition to a client?
Well, I think the first is just to sort of echo that last point, is that your job is to be an investment professional, which is certainly much more than just the portfolio. Clients are looking for the relationship. They're looking for someone that they can trust and somebody who's trustworthy. You have to earn that trust. Our research has been very clear that the clients, when they're given a choice of why they hire an advisor or they fire an advisor, that the relationship and the relationship management skills of the advisor often matter a lot more than the portfolio returns or results.
Right.
So leaning too heavily on the portfolio management as opposed to the relationship management may not yield you quite the differential difference, I guess, in the value proposition you think it's going to be.
What do you think? What's the most important thing for advisors to focus on then?
Based on our research, it's trust, but it's not just trust. Trust is, the fact that people want someone that they can trust is really not an epiphany. But what our surveys showed of investors that use advisors is the difference in the levels of trust really matters if you're looking to grow your business through referrals or retain the assets that are so important in the fee-based world. The difference between high trust and any other level of trust is so dramatic that it's a very different effort to try and get high trust from your clients, and mostly that's just getting to know them as well as possible, which means you probably have to borrow some of the time that you've been otherwise spending on the portfolio management and reallocate that to the relationship management.
It's an enormous responsibility being an advisor, for sure.
Absolutely.
All right. Well, thank you very much for joining us at Inside ETFs. And traders, thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.